What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today, I am looking at another property on Collab. If you don't know what that is, it's another fractional real estate investing site. They specialize in student housing. Although, if you read their offering documents, I guess it is possible that they'll have some other property types in the future, or at least they kept that open. Um, if you remember, I did a couple of videos on this. I bought a little piece of this 33 mine. I don't know that it was a great purchase. I'm going to get into a couple of questions that are outstanding on this other one today. Um, it's really hard to figure out where they come up with these numbers, this 7.5 and your annualized return. It's even harder on this one. And so one of the things, the way I'm picking these, like I just have a really hard time um, trying to buy something that's going to have a 6% annual distribution and then have a decent amount in annualized returns when they're based on appreciation. Just because when I compare it to other options of properties that I can buy, and like this 4.5s and 5.5s, I have a really hard time with that because if you think about the deals I've bought on Mogul, especially the best one I got on there, I've got I'm basically doubling these, right? Like it's so far 11% cash on cash return now. Um, that certainly might not hold up, but if I'm taking all the platforms at their word, which is what I'm doing to begin with, and then doing some due diligence, the ones that are just projecting a return that's lower than the others, unless I have a reason to believe they're just trying to be more conservative than the others, it's tough to want to really jump into some of these. And so I don't know that I'll even dig into these 4.5s and 4.8s. um, Maybe if I get a little bit more comfortable with the platform, but that's why to start I picked the 7.5 also because I knew this market pretty well. So if I'm getting a somewhere around there is where I start to think, okay, if I'm getting that much of a cash on cash return and I can start getting some appreciation on top of it is where I start to feel good, right? I mean, if I'm trying to get single digit returns on something or really speculative double digit because most of the return is coming from appreciation and I don't have a good story for it, then I'd rather just put that money somewhere. I mean, honestly, it's just not the way that I want to invest, right? But if I were, I think that there's, it's much more of a stock market type of investment, right? Where you're just buying and hoping for the asset appreciation. One of the reasons that I appreciate real estate a lot is, you get, in general, long-term steady cash flows if you buy the right properties, right? I mean, that's what we're always trying to do. Obviously, if you watch some of the videos that I'm doing on the lofty properties, when I'm looking for those deep discounts, and that's something different. It's more of a flipping type strategy. But as far as like in general, what I would hope that I'm doing on most of these platforms, if I'm buying a piece of a deal that I'm going to hold long term, is I'd like to have outsized cash on cash returns, and then also in addition to that, get some good appreciation and have a real understanding of where that's coming from, right? And so I had a hard time really putting that math together on 33 mine. I have some issues with this one as well. One of the things that's really interesting is they have this 7.1% projected annual distribution here. I can't find it anywhere else in their paperwork or when I click on the learn more and try to dig into here, they don't even have it on this page, which they do on some of the others. So I don't know, that worries me a little bit, but I want to dig into, it's a property that I would like from a lot of perspectives, but there's also I have a lot of open questions, and so I'm going to dig into the market, do the due diligence that I can do, and then tell you the things that I want answers to before I'd really have an interest in buying this one. I have asked for some of those questions in the Collab Discord. Didn't receive any response. It's only been, I don't know, a little more than 24 hours, so it's not the end of the world. Maybe they'll get back to me and I'll do an update. It's slower than I'm used to on a lot of the other platforms. I mean, I think I told you, like, I really enjoy Mogul. If it's a business day, they get back to me basically instantly. Lofty, you can typically get a response on simple questions pretty quickly. You can at least talk to somebody in their Discord or through their, platform kind of easily. I just haven't found, I did get answers to the one questions that I asked about 33 Mind, but then I had these follow-up questions and haven't gotten any response yet. But obviously, if I get those, it'll change my mind about some stuff. Well, let me show you what this property is. So it is, um, it's by UC Berkeley. It's in Berkeley, California. The first thing I wanted to do is see, well, how close to the university is it actually? And it is extremely close. Now, one thing, it stopped measuring here because I guess that's the campus, and then it's saying, okay, you're going to walk from there. Obviously, you're not parking right here. But I mean, it's very close. So makes perfect sense. This is a location for student housing. This is the street view of the property. It looks like this was taken in June of 2022. Anytime you're using Google's Street View, you always want to see, excuse me, when that image capture was. Because we don't know that it looks like this. And actually, if we look at the property description, they say, it's had recently undergone a top tier renovation. One other thing I want to point out, they said this is building featuring 3 units, and we're going to get back to that in a little bit. But let me just go into this. Okay, so I love this location, right? If I'm going to have student housing in what appears to be higher end student housing, at least from my perspective. I mean, I lived in pretty crummy places when I went to college, so maybe it's just because I'm cheap. And this picture doesn't make it look like it's amazing, but when we get into the price points and when I show you that it is their views and everything, I think is what you're really paying for. Views and proximity. So the first thing I did is looked up Berkeley, California. I always like to see. I really like to read through all this stuff, but obviously I don't do it when we're here. The number one thing I'm looking for, what does that population growth look like? And it has been very strong since 2000. I also looked at the county to see, the larger market because, Berkeley, it's a very, it's only 125,000 people in the city. It's a big enough market, but it's, I really enjoy investing in larger markets. I think the bigger they are, the more difficult it is for them to change directions, if you have a very small population and a small employment base and everything, a single employer changing some policy or going out of business could have a huge effect on the outcome of that town. Now, obviously, Berkeley, California, UC Berkeley is going to have a huge impact on this, right? But so I looked at the county as well. The county's also growing, although with the most recent estimate they show a slight backslide. I think it's possible, because I know some parts of California are getting a lot of out migration. But it's also, I don't trust the estimates nearly as much as I do the actual census data. And it is a small move in 3 years, so I don't know. It's a ding against the market, but it's not the end of the world. I'd want to really dig in a lot more before making a big investment there. I also wanted to look at the university because it is student housing that they're doing, right? And so this I found interesting. If you look at their fall freshman profile, this is like how many freshmen they've admitted each year. It's actually gone down a little bit. We don't have the most current 2 years here. It's possible I could have found that if I did more digging, but I was pretty happy just to see this trend. It went up and then came down a little bit, but one of the things that I noticed, it's really not very different from 10 years ago. And when we looked at when we looked at Rutgers, which is the New Brunswick one, that 33 mine, you had a huge growth rate, right? Which is if I'm going to buy student housing in a market, I want a market where the main school is actually growing, has a growing enrollment over time, and so this I was much more pleased with than I am here. But I think this isn't the end of the world. It's not. It is. We did have one shrinking year in our data. Like I said, might want to dig into, see if you can find the, for 2023 and 2024, to see what were actually admitted. Well, and actually, and really, I guess we should be looking at the enrolled, not the admits. Is that? Yeah, and here too. So, oh, that's really interesting. So they're having to admit more to get not, so this growth rate isn't nearly as strong as the admit. So they're just getting a lot less people. I didn't even pick up on that before. So see, I mean, all of this stuff, this is why you want to do your own due diligence and dig into your data on your own as well, because this is just stuff that I'm looking at. I don't have a ton of experience with student housing. I worked on financing some deals and some acquisitions for large companies a long time ago, but this is not my forte at all. I'm just trying to figure out, where do I think the demand is coming from? But obviously enrollment is a much more important number than how many they're admitting. Um, and so what do we have here? Yeah, so we have a pretty good trend here, right? Actually, they're pretty similar growth. Actually, yeah, it might even be better. Um, yeah, a little bit. So that's actually a good thing. I missed that, and that's a little bit, at least similarly as strong, if not a little bit better. Um, so I like that. One of the things, uh, so let's get back into the property itself. They describe it as 3 units here. When I dig into the property description, actually in the offering memorandum, which is what I think should be the most accurate info. It says it's 5 units here, 9 bedrooms, 5 bathrooms, and 3,449 square feet. This is important because, so I don't know if you remember, they give us this total property price and maximum raise. And so this is the number we're kind of thinking about when we're looking at any fractional real estate. We're thinking about, okay, if I bought all of it at this price, how does that compare to me buying it in real life? And then we can decide if the shares that we want, if they're, if we think that's a reasonable deal or not, right? And so with these student housing properties, it's much more difficult than say a single family home. And so uh, I wanted to dig into, well, how are we coming up with that price? I've got some notes here. Um, let's see. Oh, and I didn't even put it in here. Wait, did I? Offering price. Yeah, so page 41, right? We're gonna go. This is I thought was super interesting here. How do we determine the offering price? Is determined solely by the management and bears no relation to traditional measures of valuation, such as book value, price to earning, anything like that. And so that worried me a little bit. A lot of the other platforms are giving us appraisals, third-party appraisals to give us a value. We didn't get that here. With commercial properties, which arguably this is because it's student housing and because it is a 5 unit property, and typically with residential properties, once you get past 5 units, that's in the industry. That's when we start looking at that as commercial. Usually banks will call a 5 unit property commercial versus 4 units is still residential. Um, I know that confuses a lot of people, and it is just sort of an arbitrary cutoff. But so, you can't just, you typically would value this on a cap rate, but without having access to, a lot more data, it's especially, if I'd want to know what student housing cap rates are in that market. And I don't have an easy way to get that because I no longer have a CoStar subscription. It's going to be really hard to value. But because it is really close to being a residential property, right? It's 5 units versus 4. I figured I would take a look at Redfin and Zillow and everything like that. This is actually not the right one. That's just one of the units, and this is, yeah, this actually describes it as a, oh, this is just unit 4 of it. So let me see. I think it's this one. Yeah. Um, this one just says it's 4 bedrooms, 5 bathrooms. I think I kind of have figured out why that is with the unit splits, but I'm not really sure. I think some of the bedrooms, or one of it might actually be more like a studio, but I don't know for sure. And that was one of the things I asked is like, can you explain what the unit splits are? You can see this one says, okay, this is larger. This is about 400 square feet larger than what we saw in this description. Zillow actually thinks it's smaller. But so I was looking at prices. Okay, Zillow gave us his estimate and an estimated range. You know, obviously this is lower than what we're talking about at that 1.995. Um, Redfin mentioned, this was last sold on September 1st in 2023 for 1.375. So, they're asking a pretty big premium over that. Now, they did say in the property description that they did it has undergone a top tier renovation. So we're going to get back to that in a minute. I just want to look at one more spot. They have or did I give you both of those estimates, right? So that was the sale. This was one's estimate. Maybe the one I closed actually had the other estimate. I think I did that. Sorry about that, but it was another one that was relatively low compared to what we're talking about here. Let's see. And then I looked it up on LoopNet. This actually looks like this was the listing. I think the last time that it sold. This is the only spot that I saw something that actually gave me, what the unit description was. Oh yeah, so this actually should be 4, 5, 6 bedrooms if it's a 2-bedroom plus 4, 1 plus 1. So that doesn't really match up with the 4-bedroom description. It does match up with 5 units. And then how they have 9 bedrooms is really confusing out of that, right? And this is why I was hoping that they could explain that. So because it doesn't make any sense, right? This would be 4, 5, 6 bedrooms. But they're saying it's 9 bedrooms. So obviously, it could be part of the renovation. But so I asked them to shed some light on that. And it's something I definitely would want to know before I pulled the trigger and bought any of these. They mentioned, okay, they did a top tier renovation. This is all that I got, right? It's just the unit 1. I couldn't find, I was trying to figure out, are there more units, right? But I don't think that there are. I think that this is all we get. And so this is unit 1, because the dollhouse view in most of these usually will give you, the most zoomed out version. But so when I look, it is, so you have, I think this is really, we were praying for the proximity, and I think this view, right, is like taking you a long way. I think that's where a lot of the money is. But when it says, they did a top tier renovation, one of the questions I asked them is this walkthrough, is this the after? Because this is not what I would consider a top tier renovation, right? I mean, like they painted, wood paneling, it looks like. You can see when you look at outside, like it doesn't even look like they repainted the outside of it. So I don't know. I think it's pretty odd that they would give you this walkthrough, say that it's a top tier renovation, but have it look like this. So I'm curious if I would hope that there would be some after pictures that look a lot better than this, but that I didn't find. When I was looking at, I looked for some. Oh, are these pictures? I think these pictures are the same too, but let's take a look at those. Oh, maybe they're not. Okay, so maybe they're pictures. Well, they are still, though. Yeah, no, it's the same kitchen and everything. Yeah, I mean, so this is, I think it's quite a stretch to call this a top tier renovation. Maybe for student housing, you could say that it is. But so one of the things, and then I want to dig into the property itself a little bit more. If you remember, one of the things that they're doing that I really like is giving you this live property info, so you can look at like the leasing info and their repair requests in real time. So they do have, they have this broken up as 5 units. And so I don't know, so I guess they're not doing the rent by the bedroom in any of the units, but it's not clear, it's not clear what's going on here, right? Like, I mean, we have a picture of unit 1. We have that old description that shows it was 1, 2, 1, and then for single bedroom units. So I don't know. I'd really like to know what's going on here, but that's a pretty solid rent roll, right? You have, um, they're pretty high rents, as in my mind. I mean, maybe for that market it's not, and that's something I'd want to dig into a little bit more. But you do at least get that real time info. I like that a lot. But as far as financials, and so I was talking about before, there's not another place where that 7.1 percent estimate shows up. They give us 1 quarter, right? This is just the previous quarter's financials. And so I don't know, honestly, if, annualizing that makes a lot of sense or not. And they should have a whole year of financials, but we're not being provided that. But so let's say we analyze that, right? Or annualize that. So we turn that to 4, and then we compare that to, the total property price, right? So divided by 1.995. We're talking about a 4.8 cap if we look at it that way, right? I mean, and that's an all-in, right? I think when they're doing this, that they're. Well, I don't think they are actually. This is just the total property price. This isn't. I don't believe, and we'll look at the math in a minute, but I don't believe that this includes the closing costs as well. I'll show you why I think that. But so that's a. I don't know. For it's obviously it's lower than what you would be paying in interest if you get debt on this. So you can't get accretive debt. And that's one of the things that, if I'm buying real estate, I want to buy real estate that will pay for debt so that I can get a levered return. That's not always something that has to happen, but it is, if I'm getting a lower return, a lower, current NOI than I would get on a debt product, then it seems like that I could take less risk and get a better return. So I don't know. I really want to understand what's going on here. It's possible that it doesn't make any sense to annualize this number. Maybe there were more expenses. Maybe they'll have more other income, or it bothers me to not know. And when I don't know, I'm not going to make the investment, right? Like, so these are things that I think they're outstanding questions, and hopefully I'll get answers to. And then I think on every one of these platforms, if you're dealing with these, I mean, I think these are the types of things that we should be pushing for. I did just want to mention, I checked the flood map. That was fine. I checked, let's close that. I checked the crime map, and this is where the property is. There was nothing right here. All this stuff, none of it worried me too much, but, that's just letting you know that part of the due diligence is something you still want to dig into, even though it's student housing. I'm going to start closing some of these so that I can already tell my computer is mad at me for having so many tabs open. Okay. Even get rid of this rental performance. And so a couple of things that I wanted to point out. This is their offering memorandum, and it is, so if you look at property documents, they don't have any. And, they're like, transparency is one of the most important principles in our community. That's why we openly share documents about the property, but they don't have any on here. And I don't know, that just strikes me as, really hard to want to. Maybe I should actually stick some questions on this piece. I don't know. I guess maybe their Discord's just not the best way for me to find answers to questions, but that's what I've gotten pretty used to with some of the other sites. So that's. I have to try something else. And they did answer the 33 mind questions, like I said. But a couple of things that I wanted to point out on here. It is a long document. It covers several properties, so you have to make sure whenever you're reading it, you're looking at the series that's related to the property that you're looking at. But so this is where I got the pricing. So they're saying, when they talk about the raise, they're really trying to raise this 790,000, or that's the net purchase price of the property if they're doing $1 million raise, and that's only getting you, just under 40% of the property, totaling the total asset price there. And so let me make sure. Description. So I'm going to show you that, but before, one other thing that I had missed when I was looking at their fees before. So, their Collab is managing these entities and they're charging fees for it. And I think that that's acceptable, right? I want them to make money so that they can help me make money. But a couple of the things that didn't make a lot of sense, they're charging, it looked like 8% as a property management fee. But they're also charging an asset under management fee in addition to that. So it ends up being quite a bit of fees. Um, but including that the property damage, insurance proceeds from property damage and any awards in connection with condo or eminent domain uh, things are included in the definition of gross receipts, meaning if one of these two things occur, the state or the government takes the property away from you, or the property is damaged and you're getting proceeds, then they're entitled to 8% of that, and that seemed a little egregious to me. I don't know. Um, I honestly don't know enough about if that's a standard in property management contracts for a property like this in California. I know if this was something that I was negotiating myself, it would certainly not be a part of my contract. So I think that's kind of strange. I want to jump into though. Let's see, page 27. I'm trying to ramble a little less, which is why I actually gave myself some notes on the pages. So they did math on two different ways of, if they're going to raise 10,000 allocation after offering expenses for 10,000 raise, or if they're going to raise 1 million, right? And so this is just the different ways. So they're basically just showing you how it's going to be allocated. So this is that price that if that is 40% of, or 39 point something percent of this total property price here, right? So this number isn't including all of these other costs, which, a sourcing fee that they're charging, acquisition expenses, an operating reserve, which I do want there to be an operating reserve. But one thing I'm curious about, and maybe, yeah, see, they don't even have a note on this, but so are we funding the whole reserve? Or as a 40% owner, are we only funding 40% of that reserve? I couldn't figure that out. I'm going to say 40, even though it's 39.6, but I'm going to keep it simple for that. Offering expenses you're paying, and then brokerage commission. So all of those um, are on top of that almost $2 million. And so, if you remember, it was purchased for 1.375 less than 2 years ago. They did a renovation, but it honestly doesn't look like a very expensive renovation to me. And now your all-in cost is looking like two point 2.2 million, basically. Somewhere around there. And that is hard for me to swallow. Now, if they are creating a ton of value, I don't care if they're making a lot of money if I'm still making money, right? But it's very difficult to figure out if I'm making money. And so, one of the things I was trying to figure out is, was there any debt involved? I've got this note that the related party transaction, but I just looked there to it helped me to figure out what was actually going on with the percent ownership, because this raise in this series is only going to end up owning this. But then, so yeah, I showed you the offering price thing. The only other thing I wanted to jump into is the financials that they're providing here. And so, they give us a balance sheet and they're saying, okay, we've got some cash on hand. There's the building, which this is the building and improvements. They're basically saying is, a little less than $1.5 million, right? And so if that is the net, if that's the asset value on their balance sheet, that should, and this was December 31st, 2023. Presumably, this is after the purchase in September of that year, and then their renovation, right? In your expenses in your renovation, you would expect them to have capitalized those into this price. So it looks like they're all in, should be less than 1.5. Uh, so we're looking at like a 33% return over that number at the price that we're paying. Now it's possible that it took longer to do the renovation than I think, and I mean, it just really doesn't look like it was. I don't know, and that's part of the problem, right? Is they're not really sharing what was done. But so it looks like a huge premium. It doesn't look like they got the property for a steal just because it was widely marketed, right? It wasn't like, I think I've mentioned this before. think by the time a deal is on LoopNet, they've tried to sell it every other way. So it's not necessarily that they just, got a great off-market deal and then they're just taking some of that profit. So they have that, but then they have like, okay, these are, uh, they actually have income statements. And so from August to December of that year, and they bought it in September. And so if it was operating from August 11th, it makes me think that, I don't know, it seems like that a renovation must have already been done by then. But so they give us some, income and expense information from there. Um, but they don't give us any 2024 data in here, right? Like we don't have the full year 2024. We were in that other spot. We were given 1 quarter of 2024. Like it looks like it's the fourth quarter, although um, really when I'm looking at it, is it the fourth quarter? Let's see. I think it is. Let's go back into property financials. Yeah, date 12. So it's previous quarter property financials, and it's dated the last day of the quarter. So presumably this is the fourth quarter financials. But I don't understand why they're not giving us a full year anywhere. Um, because they did own it for all of 2024. And so without having that, it's really hard to figure out, you know, I would need that NOI to apply a cap rate to come up with what I thought is a reasonable price if I even knew what cap rate I should use for it. And all that being said, I think that, you know, I'm hopeful that they'll get back to me about some of this info. Um, but there is, as far as I can tell, there is no justification anywhere that gets us to, let's get back out here. There's nowhere that I can look at math and income from the property and figure out where this 7.1 annual distribution comes from. And if you think about it, if I'm paying $2 million and that annualized number in NOI is correct, then I'm making less than a 5% return. And there's no debt as according to, let's go back to that property description, right? Was that on page 7 or um, they're saying there's no debt on the property. So it's not like they're levering a return, but they'd have to have um, a much, ridiculously cheap debt to lever, a 4.8 cap anyway. Um, so it. I don't know where this number comes from, and then definitely don't understand where this one comes from. Right? They didn't give us any information as far as like where we're getting appreciation. So it's really unfortunate, right? I want this site. I think you can tell I'm really trying to understand what's going on with this one because I really like student housing. I think it is anytime that you can take a basically residential property but layer a business on top of it, I think that there's the opportunity to get outsized returns. It's why I like the short-term rentals, like what Mogul's doing, and you see some of those on Lofty too. It's why I like the rent by the rooms. You can see that on both of those other platforms as well. I always forget to say, please like and subscribe. And also on all of the, all the platforms I mentioned, I do have links in the description below to them. Some of them give you free money if you use the links. You read the terms and descriptions and understand what's going on there. As always, do your own due diligence on those platforms. But so I really want these to work. And so I'm hoping they'll get back to me and give me some good info. But as it stands right now, I mean, they're just not providing everything that I would want in order because I'm not just going to take like right now they're saying 7.1% return. Just trust me, bro. Like there's just like there's nothing backing this up or, your projected annualized return. I mean, it is, when you click on it, they're like they explain how they're coming up with it, but they're not giving me any of the backup, right? And this is looking at the past 12 months. But like they have, they won't show, they're not showing us that. And I don't really understand why. I don't know why. They clearly have to have the data. They have to have, trailing financials and, they're giving us the fourth quarter. And so maybe if I have been looking at this every month, I could have always, for the last year, maybe I could have seen it each quarter and been able to add it up myself. But there's not a good reason. Anytime any of the platforms don't want to give me some information, I'm always assuming there's a reason for that, right? Like there's um there's no reason not to be completely transparent if I'm trying to buy a piece of a property that you're operating and that you have operating history with, if it is going to support the returns that you're saying that I'm going to get. And so, what could one of the things I wanted to mention, because sometimes you can see these assets online and, maybe you buy a little piece and it is paying out that higher distribution and you can't figure out why. One of the things that some of these companies do, and I'm not saying it's what Collab is doing, but one of the things that some of them do is, you remember we put $80,000 into a reserve. Well, some of them will pay out, all of the net operating income, and then also pay out some of the reserve. And then they're saying, well, yeah, that extra money is extra return, but it's really not, because yes, you're getting some of your money back, but presumably you need a reserve, right? And when you run out of it, then they may not be able to keep up that same level of payment. So that's one of the reasons that I'm really interested in seeing the financials themselves, because I want to know, is this yield coming from actual operations, or is this yield coming from, a manipulation of cash flow, in any other way, right? And so that's what you see a lot of that on Lofty, where there's, they're using different rent credits, and they're doing a lot of different things to like boost what the yield is in certain months. And as long as I can figure it out, I don't, as long as you're upfront about it and I can figure it out and see what's going on, I don't mind it too much. I mean, I think it's a little bit, I think they're somewhat counting on people, whenever someone does that, they're somewhat counting on people not being smart enough to do the math themselves and realize what's happening there. But at the same time, it is, we are, as real estate investors, we should be doing our own due diligence, doing our own math, figuring out, what the deal really is. And so, it's a little bit of the buyer beware aspect of this, as long as they'll actually give me the information. But when you give me a number and I can't get anything, there's no way for me to do math to figure out where that's coming from, I have a really hard time, pulling the trigger for any serious amount of money. And, I had some similar questions on that 33 mine. It's why I bought, a little piece. I want to see how that goes. I also think, maybe I thought maybe I'd get a little bit more insider info being part of the ecosystem. And I did get, one email update, but it wasn't really much more info. They were still only giving quarterly data. And I don't really understand why they'd want to do that, right? Why you wouldn't want to give me, either full year data or trailing 12 data, because if anything short of that, and I'm just having to guess what my actual NOI is, and then and I think what I suspect is they don't really want you to do that, because they don't want you to compare that. They don't want you to look at this as a property, right? They want you to look at this as, you're just buying these shares in this entity, and we're going to pay you out this return, and don't really pay attention to what's happening with the property itself. I mean, that's what it feels like at this point in time. Um, Hopefully that's not what's really going on. And it's all of this is not to say, I'm not telling you that you won't get paid that 7.1%, right? I'm just telling you there's not enough information to convince me that I will get paid that. So I'm not going to make that investment, right? Like, I'm not just going to buy without understanding, everything that's baked into the numbers that they're giving. I mean, it's the main reason that I'm buying pieces of real estate online versus pieces of businesses, is that, or one of the big reasons is that uh, it is much easier to understand what the value should be of a share or of a token or of a fraction of a piece of real estate than it is, a company like Apple or Nvidia or any of those ones, right? Like, I mean, like, trying to understand what those companies are worth and then buying a piece is virtually impossible. In general, trying to figure out what a piece of real estate is worth and buying a piece should be a lot simpler. Um, but when I don't, when the people selling the pieces aren't giving me the info that I need to come up with that price, then it's just not going to work for me, which is unfortunate because I like, I did that a couple of videos about it, telling you what I do like about the platform. I think they're doing a lot of things right, or at least they're heading in the right direction with a lot of things. But unfortunately, from a transparency and disclosure perspective, uh, it's not enough to make me happy. And so I think that's about all I have to say today. Um, hopefully all of us together can really push some of these platforms to just be more transparent, to give us more data. And that's it. So until next time, you know the thing, I'm going to just keep making mistakes so that you don't have to.